Now, let's dive into the different types of audits conducted for public sector undertakings. This is a crucial area for your exams, so let's break these down clearly.
First, we have performance audits. Think of these as audits focused on the 3 E's: economy, efficiency, and effectiveness. The goal here isn't just to check if the books are correct, but to provide an objective and systematic examination of evidence. This helps improve public accountability and gives decision makers the information they need to take corrective action.
Next, we have the comprehensive audit. As the name suggests, this is a holistic approach. It combines elements of financial audits, compliance audits, and performance audits. By blending these three, the auditor can form a complete, all-encompassing assessment of the entity.
Then there is a very interesting concept called the propriety audit. Now, pay close attention here because this is where students often get confused. In a regular compliance audit, we check if a transaction follows the rules. But in a propriety audit, the auditor looks beyond the rules. They ask, even if this expenditure follows all the rules and regulations, is it still wasteful or improper? For example, a transaction might satisfy every single formality of a regularity audit, but it could still be highly unfruitful or avoidable. That is exactly what a propriety audit aims to uncover.
To wrap up this section, you'll see several theoretical questions in your text. These are designed to test your application of these concepts. For instance, you might be asked to plan a performance audit for a sugar industry or determine what a comprehensive audit would cover for a solar power project that has faced cost overruns and delays. When answering these, always link your points back to those core concepts of economy, efficiency, and effectiveness. Keep practicing these scenarios, and you'll master this topic in no time.
First, let's look at the case of BT Limited. Here, we have a company that was wholly owned by the central government but has now been disinvested, with 40% of shares held by the public and listed on the BSE. The financial manager, Sam, believes that because they are now subject to BSE regulations and the Companies Act 2013, the C and AG no longer has a role. Now, this is a common misconception. You must remember that as long as the government of India maintains a significant stake or the company remains a public sector undertaking, the C and AG's authority doesn't just vanish. The C and AG's role in auditing government companies is statutory. Even if the company is listed and follows SEBI or BSE guidelines, the C and AG still retains the power to conduct supplementary audits or appoint auditors as per the legal framework governing PSUs.
Moving on to question 6. You've been appointed as the auditor for AKY Limited and need to draft audit criteria. When you're looking for sources to establish these criteria, think about where the standard or benchmark comes from. You would look at internal sources like the company's own policies, manuals, and board resolutions. Externally, you'd look at laws, regulations, industry standards, and perhaps benchmarks from similar companies in the same sector. Essentially, audit criteria are the standards used to evaluate the subject matter.
Now, let's analyze the situation with Verma and Associates and MAP Limited. The C and AG appointed them for a performance audit, but the firm conducted the audit based on public interest and publicly accepted customs. The C and AG rejected the report. Why? Because a performance audit is not a general check of customs. It is specifically designed to evaluate economy, efficiency, and effectiveness. If the firm failed to use specific, measurable criteria and instead relied on vague notions of public interest, the audit lacks the rigor required for a performance audit. The C and AG was right to reject it because the audit didn't meet the objective of assessing the actual performance of the PSU.
Next, we have a scenario involving a state electricity distribution company. Look at the objectives. They are checking if costs are recovered via the Regulatory Commission, if tariff orders were issued timely, and if billing and collection were efficient. This is a classic example of a performance audit. It's not just about the numbers, it's about whether the operations are effective and efficient. To plan this, auditors would first understand the regulatory framework, identify key performance indicators, and then test the actual outcomes against those benchmarks.
Finally, let's look at the case involving the state government department and the definition of a flat. The C and AG noticed that the database lacked a column for the area of the building, leading to incorrect classifications and undercollection of water charges. To wrap this thought up, the audit team performed physical verification to prove that buildings were incorrectly classified. This is a clear example of a compliance audit, as it checks whether the department is adhering to the prescribed law and criteria for defining a flat. The report for such an audit would typically be submitted to the governor of the state, who then lays it before the state legislature.
Now, let's dive into some practical applications regarding the audit of public sector undertakings. We have a very interesting case study here. Imagine an audit where the team discovers that a database is missing a column for the area of a building. Because of this missing data, some buildings were wrongly classified as flats, even though they didn't meet the threshold for that classification. To solve this, the audit team performed a physical verification, which confirmed the misclassification and revealed that the department was under-collecting water charges. In this scenario, you need to identify the type and nature of the audit being performed by the Office of the Comptroller and Auditor General of India, and determine who the report would be submitted to. This is a classic example of a compliance or performance-based check, where the C and AG is ensuring that the government's revenue is being collected correctly and that the systems in place are effective.
Moving on, let's look at direct benefit transfer, or DBT. This is a massive reform by the government of India designed to deliver benefits like wage payments and fuel or food subsidies directly into the bank accounts of beneficiaries. The goal here is simple: remove leakages and enhance financial inclusion. Now, if the CNAG decides to undertake a performance audit of selected Social Security pension and scholarship schemes under DBT for a block of years, you need to think about the objectives of such an audit.
Essentially, the audit would focus on the 3 E's: economy, efficiency, and effectiveness. You also need to explain audit criteria, which are the benchmarks or standards used to evaluate whether the scheme is achieving its goals. In the case of DBT, these criteria would be determined by looking at the government's own guidelines, the stated objectives of the scheme, and perhaps benchmarks from similar successful programs.
Finally, let's wrap up with the answers to the Test Your Understanding section. Specifically, look at the role of the Committee on Public Undertakings, known as COPU. It's important to remember that COPU functions are quite comprehensive. They examine the reports and accounts of public undertakings, review the CNAG's reports, and assess whether these undertakings are being managed according to sound business principles and prudent commercial practices. Essentially, COPU performs a comprehensive appraisal of the undertaking's performance, evaluating everything from their policies and programs to their overall financial health. Keep this in mind, as it highlights the layer of parliamentary oversight that exists over public enterprises.
First, let's talk about the role of the Comptroller and Auditor General, the C&AG, and the statutory auditors. You need to understand that for government companies, the C&AG has significant power under Section 143(5) of the Companies Act, 2013. Specifically, the C&AG can issue directions to the statutory auditors on exactly how the accounts should be audited. As an auditor, you are just reporting on the financial statements. Your audit report must specifically include these directions from the C&AG, the actions you took based on those directions, and how those actions impacted the company's financial statements.
Moving into the theoretical applications, let's clarify what actually constitutes a government company. According to Section 245 of the Companies Act, a government company is one where at least 51% of the paid-up share capital is held by the central government, a state government, or a combination of both. This also includes any subsidiary of such a company. A very important point for your exams: whether the company's shares are listed on a stock exchange or not is completely irrelevant to this definition. If the shareholding criteria are met, it's a government company and the auditors are appointed by the C&AG.
Finally, let's tackle the concept of a performance audit, as this is where many students get confused. A performance audit is not simply checking if expenses are in line with public interest or customs. That is far too narrow. Instead, a performance audit is an objective and systematic examination of evidence. Its goal is to provide an independent assessment of a government organization, program, or activity to improve public accountability and facilitate better decision making. Essentially, performance auditing focuses on the 3 E's: economy, efficiency, and effectiveness. It's about evaluating whether a policy or program is achieving its goals in the most economical and efficient way possible. In the context of PSUs, performance audits are conducted by the C&AG, which is our supreme audit institution, through the subordinate offices of the Indian Audit and Accounts Department. These offices don't just wing it. They are strictly guided by manuals and auditing standards prescribed by the C&AG.
Because of this, if an audit firm merely checks for conformity to customs rather than assessing these performance indicators, the C&AG is well within their rights to reject that report, as it does not meet the rigorous standards of a true performance audit. The C&AG expects the government departments or the heads of the entities themselves to develop measurable objectives, performance indicators, and systems of measurement. They are the ones who must define the outputs and outcomes in monitorable terms and benchmark the quality. A true performance audit adds value by focusing on development potential and providing constructive incentives for improvement.
First, we need to understand performance auditing. In the context of PSUs, performance audits are conducted by the C&AG, which is our supreme audit institution, through the subordinate offices of the Indian Audit and Accounts Department. These offices don't just wing it. They are strictly guided by manuals and auditing standards prescribed by the C&AG.
What exactly is the goal here? The core objectives of a performance audit are to evaluate the 3 E's: economy, efficiency, and effectiveness. We are looking at whether policies, programs, and management are actually working as intended. This process is vital because it promotes accountability for those in governance and ensures transparency for the taxpayers and stakeholders who need to see how government activities are actually performing.
A key point to remember for your case studies: the C&AG expects the government departments or the heads of the entities themselves to develop measurable objectives, performance indicators, and systems of measurement. They are the ones who must define the outputs and outcomes in monitorable terms and benchmark the quality.
This leads us to a very important practical application. If an audit firm submits a report that merely checks if expenses conform to public interest or customs, the C&AG is well within its rights to reject that report. What? Because simply checking expenses is not a performance audit in all its aspects. A true performance audit adds value by focusing on development potential and providing constructive incentives for improvement.
Finally, let's touch upon compliance audit, as it's often confused with performance auditing. A compliance audit is an independent assessment of whether a subject matter adheres to applicable criteria. Essentially, it's about checking if activities, financial transactions, and information comply in all material respects with the regulatory rules and laws that govern the entity. At its core, a compliance audit is all about checking whether the activities, financial transactions, and information of an entity align, in all material respects, with the regulatory rules and laws that govern it. When we talk about compliance auditing, there are two key pillars you need to remember: regularity and propriety.
Now, let's dive into the concept of compliance auditing. At its core, a compliance audit is all about checking whether the activities, financial transactions, and information of an entity align in all material respects with the regulatory rules and laws that govern it.
When we talk about compliance auditing, there are two key pillars you need to remember: regularity and propriety. First, regularity. This is the straightforward part. It's the adherence of the subject matter to formal criteria. Think of it as following the letter of the law, the specific regulations, and the formal agreements applicable to the entity. Second, we have propriety. This goes a step deeper. Propriety is about observing the general principles of sound financial management and the ethical conduct of public officials. Now, while regularity is the primary focus of compliance auditing, propriety is absolutely critical in the public sector.
Now, let's look at the procedural aspect under Article 151. When the Comptroller and Auditor General, or CNAG, prepares audit reports for the central or state government, these reports are submitted to the President or the Governor of the state. The President or Governor then ensures these reports are laid before Parliament or the state legislative assemblies. So, if you are dealing with a case involving a state department, the report would be submitted to the governor to be presented before the state legislative assembly.
Moving on to performance audits. Imagine C&AG is auditing Social Security pension and scholarship schemes in a state. What would the objectives be? We would look at three main things. First, was there proper planning and a process in place to accurately capture beneficiary data? Second, were the steps for implementing direct benefit transfer, or DBT, effective? Specifically, did they prevent payment delays, pilferage, and duplication? And third, were the overall infrastructure, organization, and management of the DBT system adequate and effective?
Finally, let's clarify a very important term: audit criteria. Think of audit criteria as the benchmarks or standards used to determine if a program is meeting or exceeding expectations. They provide the necessary context to understand the audit results. These criteria must be reasonable and attainable standards of performance, allowing the auditor to assess the economy, efficiency, and effectiveness of the activities.
In a practical scenario, where do we find these criteria? We look at documents issued by the Government of India and the state government. This includes circulars, official instructions, standard operating procedure manuals, guidelines for identifying and authenticating beneficiaries, and general management or subject matter literature. These documents form the basis of the audit criteria against which the actual performance is measured.